This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. It's May 7th, 2021, show number 262. Well, we had the miss of all misses here, the mother of all misses, no pun intended, and that is the job numbers of yet another Biden administration success in the making, Nick.
It was probably the biggest disappointing job number on record ever, and that's its job number came in at 266,000 new jobs. Now, a lot of it is being blamed on the fact that people don't want to go back to work because they're getting more money to stay home. So we'll see how true that is. But, considering the fact that we were looking for over 1 million jobs, I even heard, a high-end number of 2 million to get 266,000, net when you take away service and leisure, that's probably a loss of jobs. So this was a really bad and weak number overall. I didn't see anything really encouraging about it. But the funny thing is that the stock market loves it because that keeps the Federal Reserve in play, and the easy money coming from the central banks is really what keeps the market up these days anyway.
Hey, so this is a case of bad news being good news.
Absolutely. And we've been seeing a lot of that throughout the years, and this is a prime case of that.
Hey, just imagine if we could maybe shed 500,000 jobs. Imagine how high the market could go next month.
We print a negative number next month, it will be quite something. But I'm still going to put out the cautionary flag out here. I think everybody still needs to be very cautious. Markets in the S&P and the Dow are making new highs. They are not making new highs in the Russell and the NASDAQ. So you want to be careful when you see that divergence taking place, even though the markets seem like they could do no wrong at this stage of the game.
Well, our three real bellwethers, longer-term bellwethers, really are Apple, Google, and I guess Facebook, right? You could call them the bellwethers of the stock market because over the past 3-4 years, the stock market story has been those three companies' story, right? And now, to a lesser extent, a Johnny-come-lately is Tesla.
Yeah, I would throw Microsoft in that mix and maybe Amazon as well, and then you really have the complete package there. But, Microsoft is now $1 trillion company, so we always got to look at that one. But that stock's not making new highs either right now. Apple's not making new highs. In fact, Apple's not even where it was in January of 2021. And, this past earnings season, just a week ago or so, a little over a week ago, Apple reported earnings and, crapped out on the same day, gapped up and then rolled over. And it's not even back to where it was. So, there's lots of dislocations out here that you need to be concerned about. I know everybody thinks, markets go to the moon. They're never going to stop. We have a new generation of people getting into the trading business. But, like I always like to say, there's nothing new under the sun. Human nature doesn't change. And, you got to be careful out here at this stage.
All right, so let's look at gold and silver. People have been giving me flame comments, negative comments. You've been saying gold's breaking out for 3 years. Well, the fact is, last August, gold hit its new all-time high and nominal high of over $2,000 an ounce. You think we're going to break it now?
Well, we still have a little bit of work to do before we get back there. But, considering the fact that we're trading up around 1835, 1840 now, you'll go into the 1850 level, which is your 200-day moving average. Once you clear that, I do think you could break it.
So looking to clear 1850, that's the 200-day moving average, Nick?
Yeah. As of today, the 200-day moving average is around 1856. So you got to clear that by a fair amount, maybe 20, 30 points. If you do that, what's stopping gold to go back and test the 2020 highs? That's really a big hurdle, and then you'll have some smaller resistance points as you go forward. But in my opinion, that once you get above your 200-day moving average, people get excited. They all want in, and
the golden cross. That's the golden cross, right?
Well, the golden cross is really when the 50-day crosses over the 200-day moving average. But when price crosses over certain levels, that's where institutional money comes in and says, "Hey, this thing's breaking out, and I'm not going to miss it." Hence, we go parabolic again.
And what's interesting is you were saying 1,800 really heavy resistance resistance point, retested many times, failed, but now it broke through there with such authority, like a hot knife through butter.
Yeah, it did. And that's what markets do. They go up into resistance points, they stall out, they pause, and then they make another big advance, so everybody should be aware of it. You also have a nice little inverse head and shoulders on gold futures, which gives us a minor target of 1880. So once you get to 1880, you will have cleared that 200-day moving average quite nicely. So that pattern's very much in play right now, and it looks like it's on its way to fulfilling this the 1880 target.
I guess the question I was really asking, but didn't ask it real well, is when you've got a resistance point, and in any commodity, in any stock, whatever, there's a resistance point, and it's been there for nearly 10 months, and then you break it with authority. Is that an indicator?
Well, it's a sign of a bullish move, or if it was to the downside, it'd be a bearish move. But in this case, you got through 1800 pretty significantly here. It took about 10 days or so of consolidation, but once it cracked through it, I mean, we're at 1837, 1836 right now. So, when you break through these levels of resistance, they'll go right up into that next level, and then they'll stall out again. And you got a little bit of a minor resistance point at 1845, 1840, and then you got that big resistance point at the 200-day moving average, which again is 1856. So, like I always tell everybody, you got to get through one level before you go up into another. But I will tell you this, what gold did that's pretty impressive. It turned its trend up. And when I talked about that W pattern being formed, and I know we got a lot of grief on that, people saying, looks like it's going to break down, I should never listen to you, this and that. But now here we go, and that W pattern has played out spectacularly, and there's a lot more potential upside. Just got to clear these resistance hurdles.
Yeah, it's totally played out. And Nick, I just remember you saying around, I guess it would have been August or September of 2020, consolidation period. Nobody wanted to hear it because everybody wanted to believe that gold was going to go even higher and higher, and yet here we are.
Yeah, I mean, that was, a lot of times people don't understand the charts, and that's one of the primary reasons for, jumping in too soon. You got to let these things mature. And, the one thing I've learned as a trader, and I get a lot of grief from it too, because I don't put out a lot of position. But when I put out a position, I expect to win on it. And I get a lot of grief for not putting out enough. And I always tell everybody it's patience. You got to have patience. If you don't have patience in this business and you're just looking for the immediate gratification, you're going to be very disappointed, especially when these markets shift. So, I always tell everybody, let these things get to the levels, and then you look at the pattern, then you re-examine them, then you get back, then you get into the trade. I think I said the low 1700s is where gold was going, a long time ago, and nobody believed it would get down there. And, we went even actually a little bit lower, went to 1680 and double tested it. And now here we are back up at, 1834.
Hey, and even more so than gold is copper. What's up with copper today?
Copper's making another new high. I mean, it's just a parabolic move at this stage of the game, but it's up another 2.9% as we speak. And copper trading now at 473, 474. It looks like it's just about above. Well, it's actually above its old high.
Oh, it is.
Copper making a new all-time high today.
Yeah, we know that. It did it, I think, 22 hours ago. It's just it's trading at way above where it was last March. That's for sure. And it looks like it's going to keep going.
Well, you'll go a little bit more, but remember, all of these charts, when they make these kind of formations, they only last so long. Now, this is a monthly chart parabolic move, so that can last a while. Just like gold made a monthly chart parabolic move back in August of 2020. They can last a while. So just, understand that, but it is parabolic now at this stage of the game.
Yeah, definitely a parabolic move, but you wouldn't say that gold is quite at parabolic levels yet, would you?
Oh no, gold has already had its correction from its parabolic move. So when gold was up into March of last year, that's when it went parabolic. And, it took an 8-month pullback, to reset itself. And right now, gold is still in its, I like to say, the infant stages here of this move. So we'll see how it plays out. But all in all, gold is not in that similar or not in that state any longer of the parabolic formation.
All right. So can you just define what a parabolic move looks like?
Sure. So a parabolic move, if you take a look at the chart of copper, is, and we could look at a monthly chart because I like to use those bigger time frames to demonstrate it. It's when a stock goes up. If you were to take, say, a chart and you see it going up almost vertical, so maybe it's a 75 or 80 degree angle, not quite a 90 degree angle, angle, but anything above a 65 or 70 degree angle from the pivot low, if you look at a chart and it's just about vertical, that's a parabolic move. If you move up and, it's a 40 degree angle or less, that's, what we call just sidestepping or stair stepping. It's way higher. But when you go up in that vertical formation, so if you took a protractor and you put it up to your screen, you would see that the moving copper on a monthly chart is about, I would say it's just about a 75 to 78 degree angle. That's parabolic.
Yeah, so it's one of those ones, you know it when you see it, but when it starts going vertical or near vertical, then be on the lookout, huh?
Yeah, I mean, it's really just an incredible move. But, all vertical charts end the same way. And, as much as I hate to say that, because a lot of times I participate in these things, but I've seen it so many times over the years. That's just the way they end. And, again, right now, copper's in that formation.
Huh, interesting. All right. We won't talk about cryptos today, but just enough to say that they're up, but where they're heading, anybody's guess. And that is it for today. Make sure you go over and take a look at Nick's site so you can get in on these really profitable trades as well. We're looking at inthemoneystocks.com. And while you're at it, take a look at the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Email address is kl@kerrylutz.com. Nick, have a great weekend. We'll see you on Monday.
Have a great weekend, Kerry.
This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.